Welcome back to Storm Stock Solutions. I'm Grant Mercer. We're a little under an hour from the opening bell, and today's setup is all about a steadier Fed backdrop, a battered dollar, and some big single stock stories in industrials, tech, gold, and airlines. Let's bring some clarity to the chaos in this pre-market tape. Let's start with the macro because that's framing everything this morning. According to reporting from MarketWatch, Fed Chair Jerome Powell is signaling that what he's called a frail U.S. labor market has essentially stabilized. Weekly jobless claims remain low, and that's giving the Fed cover to leave interest rates unchanged for now. Practically, that does two things for traders. First, it keeps the higher for longer rate narrative on the table, but without the acute fear of an imminent recession driven by job losses. Second, it keeps the market's focus on incoming data. Every labor or inflation print from here is going to be read through the lens of, does this push the Fed to finally move or stay parked? So watch how rate-sensitive areas, growth tech, small caps, and housing, trade off that tone once cash markets open. Layered on top of that is the US dollar story. MarketWatch is flagging that the dollar has been under pressure and is now flirting with a key technical support level. A decisive break lower could accelerate downside in the greenback. If that happens, it tends to be a tailwind for commodities and multinational exporters, and a potential headwind for overseas equities that have already rallied on currency strength. So FX is very much part of today's macro puzzle, Now, on to some of the day's key drivers and individual names. One big headline, Caterpillar. According to Jamie Chisholm's piece at MarketWatch, data center demand helped KT deliver its best quarter ever, with backlog up 71% year-on-year to a record. That's a powerful read-through for industrial machinery and for the broader build-out of AI and cloud infrastructure. The picks and shovels behind the data center boom. But there's a catch, tariffs. The report notes there's a tariff sting hitting the outlook, and that's an area to handle with care. Tariff-related costs could compress margins or complicate guidance, not just for Caterpillar, but for other capital goods names tied into global trade. So this is a classic strong demand, policy overhang situation. Great fundamentals bumping up against geopolitical risk. On the opportunity side, there are a few themes traders are watching for strength right out of the gate. Tech and software get a spotlight thanks to IBM. Steve Goldstein at MarketWatch reports IBM shares are surging in early trade on the back of surprisingly strong software growth. For a company that spent years trying to reposition around hybrid cloud and AI, this kind of software beat can re-rate how investors think about its growth profile. Traders will be watching whether that enthusiasm spills over into the broader enterprise software and AI infrastructure complex. Consumer and retail also have an interesting story this morning. Levi's is laying out a vision of 2026 that looks less like classic denim and more like dresses, tops, non-denim bottoms, and even an AI stylist, according to Bill Peters' reporting. That's not just a quirky fashion headline, it's a signal of how big brands are trying to diversify product lines and lean into AI-driven personalization. Investors often watch these kinds of strategy shifts to gauge which consumer names are evolving versus stuck in old product cycles. Airlines are split between strength and stress. On one side, Southwest is in the spotlight. After 5 decades of open seating, the airline is moving to assigned seats, and MarketWatch notes investors are cheering that change as the company forecasts a big 2026 profit. The market seems to be reading that operational shift as a way to drive higher yields and better reliability. This could be an early sign of a broader re-rating in how investors value execution at the legacy carriers that modernize their models. On the flip side, American Airlines is facing a very rough patch. Claudia Assis highlights a week with roughly 10,000 flights canceled, a $200 million storm hit, and a plunging stock price. Analysts quoted in the piece suggest American is not in a position of strength to absorb that kind of reputational and financial damage. That puts the airline complex in the handle with care bucket. Traders may start differentiating more aggressively between operational winners like Southwest and those under heavier scrutiny like American. Let's talk about the under-the-radar setups I'm watching. Not buy or sell calls, just themes that could matter more if conditions line up. First, gold. The World Gold Council data, cited by Barbara Kallmeyer, shows total gold demand hit record levels last year, even as central banks actually slowed their purchases. The slack has been picked up by investors. Pair that with Steve Goldstein's separate report that gold has already blown through a fresh Goldman Sachs target set only last week. And a JP Morgan strategist is sketching out a theoretical path to much higher prices. Even numbers like $80,500 if households were to meaningfully swap bonds for gold in balanced portfolios. Now, those are scenario-based projections, not guarantees, but they highlight a clear dynamic. With the dollar under pressure and rates on hold, investors are increasingly treating gold as a portfolio diversifier. If the dollar breaks that key support level we mentioned earlier, this gold and dollar trade could become one of the defining macro stories of the next leg of the market. Second, IBM's software surprise and Levi's AI stylist both tap into a quiet theme. Established legacy brands using AI not just as a buzzword, but as a way to reinvent their business models, from how they sell software to how they personalize clothing. These are the kinds of stories I like to keep on the watch list in the background. If the market starts to reward old guard plus AI systematically, that could turn into a broader leadership theme. So, to pull it all together for the open, the Fed is on hold but sounding more comfortable with the labor market. The dollar is sitting on a cliff edge support level. Industrials like Caterpillar are booming but wrestling with tariffs. Gold is on fire as investors rotate toward it. Software is surprising to the upside via IBM, and airlines are a tale of two stories. Southwest's strategic win versus Americans' operational stress. I'll be watching how those macro levers, jobs, rates, and the dollar, feed into sector rotation once trading gets underway. And we'll be back with intraday updates to see what actually sticks once real volume hits the tape. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Stormstock Solutions, I'm Grant Mercer.